Hello everyone, hope you have an amazing day and welcome to my new blog. So today our topic is business policy and strategic management. So business policy evaluations of the concept difference between business policy and strategic management, corporate governance, concept issues, models, evaluations and significance. So, the introduction to the strategic management concept, importance of strategic management, strategy and competitive advancement or advantages. Strategy, planning, decision, strategic management process, levels of strategy, strategic decisions, vision and mission, business definitions. So, business policy. Business policies are the guidelines formulated by an organization to govern its actions. They define the limit and the scope within which decision must by made by subordinates. So it allows the lower level management to deal with the issues and challenges without consulting top level management every time for making decision. So the term business policy comprises of two words, business and policy. Business, or we know, means exchange of goods and services for increasing its utilities. Policy may be defined as the mood of thoughts and the principle underlying the activities of an organization or an institutions also. Now, policies are general statements or principles which guide the thinking, decision making, and actions in an organization. So, business policy is a set of principles and rules which directs the decisions of the subordinates. Policies are framed by the top level management to serve as a roadmap for operational decision making. So it is helpful in stressing the rules, principles and values of the organization. So policies are designed by taking opinions and general views of a number of people in the organization regarding any situation. They are made from the past experience and basic understanding. In this way, the people who come under the range of such policies will completely agree upon its complements or complementation. So policies help the management of an organization to determine what is to be done in a particular situation in organization. These have to be consistently applied over a long period of time to avoid discrepancies and overlapping also. Now, the features of business policy. So, an effective business policy must have following features that I mentioned right now. Specific policy should be specific and definite. It is uncertain, then the implementation will become difficult. Policy must be ambiguous. It should avoid use of jargons and connotations. There should be no misunderstandings in following policy. Reliable and uniform policy must be uniform enough so that it can be efficiently followed by subordinates also in organization. Policy should be appropriate to the present organizational goals also. The policy should and easily understood by all in the organization, inclusive and comprehensive. In order to have a wide scope, a policy should be comprehensive also. Flexible policy should be in operations and applications. This does not imply that a policy should be altered always, but it should be wide in scope so as to ensure that the line managers use them in repetitive or routine basis scenarios. And policy should be stable, else it will lead to indecisions or indecivences and uncertainty in minds of those who look into it for guidance also. Now, the business development course context and the policy, they have summarized development in the regard, thus the first phase. So the ad hoc policy making necessitated by the expansion of American firms in terms of product market and customers, and the consequent need to replace informal controls and coordination by framing functional policies to guide managers also. Now, replacement of ad hoc policy making by planned policy formulations and shifting attention towards integration of functions or functional areas in which environmental requirement. So, rapid force of environmental changes and increasing complexity of managerial functions demanding a critical look at the concept of business in relation to its environment, hence the need for strategic decisions also. Now, shifting of focus to the strategic management process and the responsibility of general management in resolving strategic issues. So, the central difference between strategic management and business policies is that strategic management is a system that helps guide and direct or a firm, while policies, on the other hand, are merely rules followed. So, strategy is a comprehensive plan made to accomplish the organizational goal. Policy is the guiding principles to help the organizations take logical decisions. Strategy, actions plan, policy, action principle. Strategy flexible, policy fixed, but they allowed exceptional situation. Strategy, organizational moves and decisions for the situation which have not been encountered previously, and organizational rules for the activities which are repeated in nature. Strategy, the top level management and middle level management, and policy is the top level management. Now we discuss about corporate governance concept. So corporate governance refers to the accountability of the board of directors to all stakeholders of the corporations, that is shareholders, employees, suppliers, customers, and society in general, towards giving the corporations a fair, efficient, and transparent administration also. So following are cited a few popular definitions of corporate governance. Corporate governance means the company managers who its business in a manner that is accountable and responsible to the shareholder. In a wider interpretations, corporate governance includes companies' accountability to shareholders and other stakeholders such as employer, suppliers, customers, and local community also. And corporate governance is the system which companies are directed and controlled the firms at global level, recognizing that better corporate governance add substantial value to their operational performance in the following ways. It improves strategic thinking at the top by including independent directors who bring a wealth of experiences and a host of new ideas. It justifies the management and monitoring of risk that a firm faces globally also. It limits the responsibility of senior management and directors by carefully articulating the decisions making process. It assures the integrity of financial reports also, and it has long-term reputational effects among main stakeholders, both internally and externally also. So, need for corporate governance, widespread of shareholders. Today, a company has a very large number of shareholders spread all over the nation and even the world. So, and the majority of the shareholder being under organized or unorganized and having an indifferent attitude. towards corporate affairs. So the idea of shareholders democracy remains confined only to the law and the articles of the associations, which requires the practical implementations through a code of conduct of corporate governance also. Now, changing ownership structure, the pattern of corporate ownership has changed considerably in the present day times, with institutional investors, foreign as well as India, and mutual funds becoming largest shareholders in a large corporate private sector also. So these investors have become the greatest challenge to corporate management, forcing the latter to abide by some established code of corporate governance to build up its image in society. Now, corporate scam or scandals, corporate scams or frauds in the recent years of the past shaken public confidence in corporate management. The event of Harshad Mehta, as you all know, that the scandal which has a perhaps one biggest scandals in the heart of and mind of all, so connected with corporate shareholding or otherwise being being educated and social connections and consciousness. So the greater expectations of society of the corporate sector. So society of today holds greater expectations of the corporate sector in terms of responsibility price, better quality, populations control, best utilizations of resources, etc. To meet social expectations, there is a need for a code of corporate governance for the best management of company in the economic and social terms also. So hostile takeover of corporations witnessed in the several countries, or it put a question mark on the efficiency of management of takeover companies. Thus factor also point out to the need for corporate governance in the form of an efficient code of conduct for corporate managements. So huge increase in top management and compensation. So it has been observed in both developing and developed economic that there has been a great increase in the monetary payment, that is compensation packages of top level corporate executives. There is no jurisdictions for exorbitant payments to top ranking managers out of corporate funds, which are a property of shareholder and society also. Now, globalization's desire of more and more Indian companies to get listed on international stock exchanges also focuses on the need for corporate governance. In fact, corporate governance has become a buzzword in the corporate sector. So there is no doubt that international capital market organizes only companies will manage according to standard codes of corporate governance also. So objective of corporate governance. Now we discuss about this. The fundamental of objectives of corporate governance is to boost and maximize shareholder value and project the interest of other stakeholders. The World Bank described corporate governance as blend of law, regulation and appropriate voluntary private sector practices, which enables the firm to attract financial and human capital to perform efficiently. So prepare it by generating long-term economic value for its shareholders while respecting the interest of stakeholders and society as a whole. So corporate governance has various objectives to strengthen the investors' confidence and in turn leads to fast growing and profit of companies. So now we discuss about in details a properly structured board proficiency of taking independent and objective decision is in place at the helm of affairs. The board is balanced as regards and representation of suitable numbers of non-executive and independent directors who will take care of the interest and well-being of all stakeholders. Now the board accepts transparent procedures and practices and arrives at decisions on the strength and adequate information also. The board has an effective mechanism to understand the concerns of stakeholders also. The board keeps the shareholders informed of relevant developments impacting the company. The board effectively and regularly monitoring the functioning of the management term. The board remains in effective control of the affairs of the company at all times. Now, the elements of good corporate governance. Now we discuss about it. So it has been established in various management reports that aspects of good corporate governance comprises of transparency of corporate structures and operations, the accountability of managers and the boards of shareholders, and corporate responsibility towards stakeholders. So while corporate governance basically lays down the framework for creating long-term confidence between companies and the external providers of capital. So there are numerous elements of corporate governance which are now I discuss in details. So transparency in boards processes and independence in the functional boards. The board should provide effective leadership to the company and management to realize sustained prosperity for all stakeholders, and it should provide independent judgments for achieving company's objectives also. Now, accountability to stakeholders which view to serve the stakeholders and account to them at regular intervals for actions taken through strong and sustained communication processes. So, impartially to all stakeholders, social, regulatory, and environmental concerns, clear and explicit legislations and regulations are fundamental to effective corporate governance. So, good management environment that includes of clear objectives and suitable ethical framework, establishing due processes, clear announcement of responsibility and accountability, sound business planning, establishing clear boundaries for acceptable behavior, establishing performance evaluation and measures also. Now, explicitly approved norms of ethical practices and codes of conduct are communicated to all the stakeholders, which should be clearly understood and followed by each member of the organization. So, objectives of the corporation must be clearly organized in a long-term corporate. So, strategy including an annual business plan along with the achievable and measurable performance targets, the milestone also. Say, well-composed audit committee to work a liaisons with the management, internal and statutory auditors, reviewing the adequacy of the internal control and compliance with the significant policies and procedures, reporting to the board on the key issues also. So the risk is an important component of corporate functioning and governance, which should be clear knowledge and analyzed for taking corporate appropriate corrective measures. In order to deal with such situation, board should formulate a mechanism for periodic review of internal and external risks also. So a clear whistleblower policy hereby the employer may without fear report to the management about unprinted or unprincipled behavior, actual or suspected fraud or violations of company's code of conduct. So there should be some mechanism for adequate safeguard to personnel against victimizations that serves as whistleblowers. So that's for the video, my friends. If you like my video, please subscribe, like, comments on my channel. Thanks a lot for watching.